Welcome to Capital Crew, the channel where we bring you the latest insights on the ever-evolving world of finance. And today, we have an exciting update for all you investors out there. Get ready to buckle up as we dive into the thrilling roller coaster ride that is the US stock market. In today's episode, we'll be exploring the exhilarating story of how US stocks have defied all odds and brushed off cautionary signals, with electric vehicle makers leading the charge. It's a rally like no other, and if you're a savvy investor, you won't want to miss a single detail. Despite the warnings echoing through the financial landscape, the EV sector has been surging, propelling stocks to new heights and fueling dreams of massive gains. We'll take a closer look at the factors driving this rally and reveal the companies poised to make a significant impact in the electrifying world of transportation. Whether you're a seasoned trader or just dipping your toes into the stock market, this video is your one-stop destination for all the latest updates, insightful analysis, and potential opportunities that could help you secure your financial fortune. Stay tuned as we unpack the secrets behind this electrifying market surge, offering you a front row seat to the thrilling spectacle that is the US stock market. Make sure to hit that subscribe button and ring the notification bell so you never miss an episode of Capital Crew from now on. Let's dive right in. US stocks have once again defied warnings and shrugged off concerns as electric vehicle makers rallied, providing a glimmer of hope in the markets. In a shortened session leading up to the Independence Day holiday, investors witnessed a surge in stock prices despite cautionary signs. One of the standout performers was Tesla Inc., which reported record quarterly sales, sending its stock soaring by 6.9%. This success reverberated throughout the EV industries, lifting shares of rivals and battery suppliers. With this remarkable performance, it seems the EV revolution is gaining even more momentum. Meanwhile, bank stocks, including Bank of America Corp., also experienced an upward trajectory. Their gains added to the overall positive sentiment in the market. The Nasdaq 100 index managed to hold on to its gains, continuing its exceptional performance throughout the first half of the year. Technology shares in particular have seen significant growth thanks to moderating US inflation and the hawkish rhetoric from central banks. However, investors remain cautious about the second half of the year, hoping to avoid an economic slump or political crises. Jim Bianco, an expert in the field, suggests that if inflation were to stabilize at around 3%, the Federal Reserve would find it unacceptable and potentially initiate interest rate hikes. Jim Bianco said that if the inflation rate bottoms at 3 and starts drifting higher, the Fed's going to find this unacceptable, and that 2 rate hikes that we have priced in for the rest of the year will happen, if not 3. However, recent manufacturing data presents a grim picture as US factory activity hit its lowest level in over 3 years. Production and new orders data indicate a potential pullback, adding to concerns about the overall health of the economy. Traders are anxiously awaiting the upcoming earnings season and crucial economic indicators such as the non-farm payrolls report, which is due on Friday. This data will provide valuable insights into the state of the economy and potentially influence the Federal Reserve's rate decisions. Ian Lingen, a strategist at BMO Capital Markets, believes that this week's incoming data will have more impact on the Federal Reserve's September rate decision than July's. He emphasizes that the Federal Reserve remains on a path to raise interest rates unless there is a significant downturn in economic data or financial conditions. The Fed is on a glide path to another hike, barring a dramatic shift lower in the realized data and or a sharp tightening in financial conditions. However, beneath the surface, there are signs of concern. The US yield curve inversion has intensified, indicating that investors expect the Federal Reserve's policies to rein in future growth. This inversion between the 2-year note and the 10-year rate serves as a warning sign for potential market repricing. Salita Marcelli, Chief Investment Officer Americas at UBS Global Wealth Management, highlights the vulnerability in the tech trade and warns of lackluster stock market performance in the second half of the year. With global and US stocks already more than 20% above their lows from October 2022, she advises investors to brace themselves for a potentially challenging second half. Shalita Marcelli, with both global and US stocks more than 20% above their October 2022 lows and a more challenging second half outlook, we believe investors should position for more lackluster stock market performance throughout the remainder of the year. While the stock market remains a topic of concern, the oil market has also garnered attention. US crude prices steadied around $70 a barrel after Saudi Arabia announced an extension of its unilateral oil production cut. Coupled with Russia's announcement of fresh export curbs, is expected to maintain a balance between supply and demand. Looking beyond the market events, another significant development awaits. U.S. Treasury Secretary Janet Yellen's upcoming trip to Beijing aims to mend ties between the world's two largest economies. This visit holds crucial importance as both nations seek to address recent bilateral tensions and work towards a more cooperative future. As the US stock market shrugs off warnings and EV makers rally, the second half of the year remains uncertain. Economic data, earnings reports, and geopolitical developments will be closely watched as investors navigate the path ahead. Will the markets continue to defy expectations, or will we witness a shift in sentiment? Only time will tell. And that brings us to the end of today's video. We hope you found our coverage on the recent rally in US stocks and the electric vehicle industry insightful. In this segment, we discussed how US stocks shrugged off warnings and EV makers rallied, sending shockwaves through the market. Despite the warnings, US stocks displayed remarkable resilience and continued their upward trajectory. This positive momentum was particularly fueled by the EV sector, which experienced a significant surge. Investors and enthusiasts alike have been closely monitoring the developments in this fast growing industry. According to a recent Bloomberg article published on July 2nd, Asian shares were projected to rise following the US rally. This suggests that the impact of the US stock market's positive performance is being felt globally, underscoring the interconnected nature of today's financial markets. This video highlighted the increasing prominence of EV makers in the market. These companies have been the primary drivers behind the recent rally thanks to their innovative technologies and the global push towards sustainability. The growing demand for electric vehicles, coupled with favorable government policies and increased investments, has created a favorable environment for the industry. Thank you for joining us today as we delved into the exciting world of US stocks and the electrifying rally in the EV industry. If you found this video helpful, then do be sure to like, subscribe, and hit the notification bell to be updated with our future content. Remember, financial markets are constantly evolving, so stay informed, stay vigilant, and happy investing.